PipSnipers here, back for another update. Let's do a top-down analysis over here for quant. So what you have over here is an ABC correction down. You then have an ABC correction to the upside. And let's make this of the micro degree. And we can also plot out the subwaves as well. So this would be your wave 1, 2, 3, 4, and then your wave 5. Then you have an ABC correction. And another 5-wave move to the upside for your C wave. Okay, so what this would create is a 3-3-5 Elliott wave flat pattern in which your C wave takes out your March 2020 bull market lows. So when the price came back to these March 2020 bull market lows, we saw some bullish momentum pick up over here. All the retail thought that this was the bottom over here because they were thinking that this is a double bottom, but then you had this one last sweep underneath it. Okay, so this over here was your final capitulation event underneath these March 2020 bull market lows. So we can call this our absolute bottom right over here. This was your manipulation. And then here are your 5 waves to the downside. Okay. And within this 5th wave, we have what's called a falling wedge. So what we also see is a macro falling wedge as well. So this is your macro falling wedge. Okay, so a lot of accumulation within this whole entire structure. Now, if we want to take a look at the minimum targets, what we can do is take a fib and we can, from the very peak to the trough, and we can look at your 38.2% fib along with the 50% fib as your first targets. What we can also see over here on the weekly is a weekly order block right over here. And if we analyze the volume from peak to trough, we see that your value area high is sitting right there at the 38.2% fib, right there at 32 cent. Okay, and your POC is just below it there at 26 cent. So now that we have our macro structure mapped out, what we can do is drop down to the daily time frame here and plot out these waves as best as we can. So over here is your manipulation. Let's not forget. What you have over here is a leading diagonal for your wave 1. Okay, your wave 1, wave 2, 3, 4, 5. Then you have an ABC correction. Another 5-wave move up. An ABC correction, you have a double bottom and then another 5 waves up. Okay, so your wave 1, 2, 3, and then we have a 5th wave to the upside here. Okay, so what this would ultimately create is your wave 1, come down for your wave 2, you have your 3rd wave, your 4th wave, and your 5th wave to the upside here. So it looks something like that. And then for your subwaves, if we go on the 4-hour time frame and get a little specific with the subwaves, we can say that this is your WXY correction. So your W, X, and your Y. Okay, so it would be around this level right here. And let's also try to find some more confluence with the fibs. And we see that our 1.618 using the trend base fib lies perfectly at that 32-cent region. Okay, so I do expect a correction from there. And what we can do is call this our macro wave 1 or our macro A wave. And what I mean by that is, for example, let's say you have your 5 waves up. If this is your A wave, then you'd come down for a B wave and then have a C wave and then continue the trend downwards. But in this case, what it looks like for Algorand is that we're going to have a impulsive move to the upside because we have a 3-wave move down, a 3-wave move up, and a 5-wave move to the downside. So what this would create is a macro ABC structure like this, A, B, and C. Okay, just like that. And now we're starting our impulsive move up. So, but at the same time, it's good to lock in profits because there's no guarantees, right? So this could be your 5 waves. This is your A wave, come down for a B wave, and then you have a C wave to the upside before continuing the trend. It's either like that or it's an impulsive move up, which I personally think it is. So it's going to be like this. So that's your 5 waves. And then this over here would be your wave 1. Come down for a wave 2, then you have a 3rd, 4th, and 5th wave to the upside. So you see the differences between corrective and impulsive. So this is what I see with Algorand. I hope you guys enjoyed the top-down analysis I have for you here. If you have any questions, just let me know. Peace out and take it easy. See you in the next one.